Hi everyone. Okay, we are going to go ahead and start to take a look as I try to center my camera. Apologize for last minute adjustments here. We are going to go ahead now and start to take a look at chapter 1. Okay, and we're just going to be taking a high level look here at what the objectives are for financial statement audits, consideration at a high level of the needs of users of the financial statements, get a sense at a high level, although we won't officially get into this subject until the end of the class, what the reports that are generated out of financial statement audits will look like. And then I'm going to briefly, I'm going to let you look at some of those slides on your own, talk about the CPA exam and what that's all about, but also say a couple quick words about other certifications other than the CPA. Okay, so that's basically what we're doing here. You can see that I'm using the slides from the textbook. The textbook is optional. Again, many students go ahead and order that because you're able to see some of the examples of quiz questions, examples of homework questions there. It's not mandatory that you get the book. We're not going to get too much into questions that I might ask on the exam from chapter 1 because I'm really not going to say much about chapter 1 on the exam. We're going to really hit the ground running for the chapter 2 lecture when we really start talking about the process of an audit, and we're going to look a little bit at an overview of how that's called out in the various chapters as we go forward here in this chapter. So why do we even need an audit? Since the corporate form of government has grown in the U.S., around the world over the last, couple hundred years, I guess. 100 years, really, though. You go back to the 1930s is where we really start to see tremendous growth in the number of corporations, the establishment of the Security Exchange Commission, requiring audits of financial statements and whatnot. That started 1933, 1934, so it's probably more than the last 100 years, but okay, we'll agree with this slide and say the last 200 years, growth in the corporate form of business means that there is more separation between the day-to-day management of the business and the actual ownership. So in the corporate form of business, we have stocks that are held by the shareholders. You hold those stocks, you are an owner, but we look to the management, the CFO, the CEO, vice presidents and whatnot of the entity to actually do the day-to-day management. That being the case, the investors, the owners, look to some assurance that the financial reporting anyway and the internal controls related to financial reporting are functioning in a manner that they can then be relied upon to make investment and credit decisions about the entity. The way we get that reliability is through association with an independent auditor who goes in, does certain procedures, and those procedures then support a report that can be used to determine that the entity has followed the correct accounting procedures, and these days more and more have established some internal controls that will ensure reliance over financial reporting. Okay, so you can see here that that is really graphically described here, that process on the slide, and that you have the separation between the owners and the actual day-to-day management of those shareholders, those owners, and the auditor bridges that gap in that separation by providing the type of assurance that we'll see when we take a quick high-level look at some of the reports that are generated. Okay, so you can see here that yes, you have the financial statements, the balance sheet, income statement, statement of cash flows, not mentioned here, but statement of stockholders' equity, footnotes are always considered an integral part of the financial statements, and with that comes the auditor report, and the auditor report is saying that the financial statements were prepared in compliance with in the United States U.S. GAAP that is promulgated by the Financial Accounting Standards Board, FASB. You looked at FASB quite a bit in intermediate accounting, right? And in some cases, the International Financial Reporting Standards could be relevant to a non-U.S. Company. Okay, we focus mostly U.S. GAAP in this class, but IFRS is considered an applicable, acceptable framework. Okay, now what happens? The independent auditor, of course, has to get behind just the financial statements and looks for evidence in support of those financial statements and performs various types of procedures that you see listed out at a high level here: inquiry, inspection, confirmation. All of these things are done, and all of that work then done by the independent auditor supports the assertions in the financial statements here, the balance sheet, the income statement, that the entity prepares, and the auditor looks at those and then using these procedures and then provides this audit report, which lends credibility to the financial statements. Okay, so what we're really learning in this class is, one, what is the work that goes behind the report, and then we're going to start to learn something about the structure of these reports as we go along. And, forgive me, I'm getting tangled up in my own wires here, so let me go ahead and take that slide back. Okay, because what I wanted to do was go ahead and the reason I wanted to come out of tablet mode is I wanted to show you an example of a Security Exchange Commission filing by a company that we're all very familiar with. We probably own a device by Apple at this point in time. Okay, so I'm just going to go to Apple's financial report. Okay, and let's see if we have a little luck in what we're able to find here. Okay, so we're just going to do a little Google search, and we come over to the investor page for Apple, and you can see that they have various information here. I want to look at these SEC filings. Okay, Security Exchange Commission is part of the federal government, and they're the ones that are responsible for making sure that companies have at the federal level the appropriate reporting of their financial results. Okay, so let's see, I want the 10K, okay, which unfortunately I'm not going to find here, it looks like. Okay, so that's okay, because that means I didn't search for the right thing. 10K is the 10K is the annual report, and that's what I want to look at. So let's just do this Apple, and I'm just going to search 10K report. Okay, and let's just go ahead and do that, and seems to be leading me back to the same place where I was, but I didn't see what I wanted there. Okay, and I go to SEC filings, and I'm pretty sure I'm going to be back where I started. Okay, and I'm not seeing the 10K. Okay, so that's all right. I'm not going to get mad. I am going to do it this way. Right here, they say 10K filings. Okay, and I don't know why I wasn't seeing it there on the other page, but don't argue, John. Here it is here. Okay, and let me go ahead and get this out of the way, and see if I can increase the size of this a little bit, and then I'm going to start to scroll down, and look, a lot of things go into these 10K reports. Okay, and what I'm going to look for is the financial statements. Okay, so when I click on the financial statements, they give me some different things, and I can see that I have the income statement. Okay, I have the balance sheet. Remember those statements, statement of cash flows. So they're all here. Okay, but what we're really focusing on here is this report. Okay, and I think it was, I don't want to misspeak here because then folks get mad at me. Okay, what I wanted to see was who the the auditors were, and I think it's EY. Yeah, okay, so it's EY. Okay, I didn't want to say that without being sure. Okay, yeah, so EY, there are 4 big accounting firms in the United States who audit some of the larger corporations. Now, there's hundreds, probably more than hundreds. There's tens of thousands of CPA firms, certified public accounting firms, throughout the country. Okay, but there's 4 main ones that you hear about all the time, which is EY that you see here, PwC, PricewaterhouseCoopers. Our guest speaker will be from PwC. When we put that recording up, you'll be able to see that. He talks about how startups go through the audit process a little bit. So I think that'll be interesting for us, that we'll have later in the term here. There is Deloitte is also one of the big firms, and then the other one is KPMG. That's the 4 big firms, but there's many other firms. All of them have contact with Golden Gate students from time to time, and hopefully you'll get a chance to meet some of the folks from these firms and maybe get an opportunity. You know, working for government, as I mentioned in the introductory video that I posted up a little earlier, I work for the federal government myself as an auditor. Security Exchange Commission hires folks. That's federal level. State Controller's Office, state level. City and County of San Francisco has opportunities for folks to work too. So it's not just working in the private sector, working in public sector and government as well. Okay, so but I digress a little because what we're looking at here is really this audit report issued by EY. Okay, and notice that they say that the first thing you see is the opinion on the financial statements about Apple, and they say, hey, look, we have audited the balance sheet, and they call out the financial statements, and they say, in our opinion, okay, right here, the financial statements are presented fairly, etc. Okay, now we are going to look at this report in chapter 18, and I'm going to expect you to be very familiar with this report. All I'm telling you right now is that you should understand that that's the objective of the audit, is to give this report. And then investors, creditors can read this, and they know that those financial statements we looked at, balance sheet, income statement, statement of cash flows, etc., can be relied upon, okay, to make the investment and credit decisions. Okay, now since Apple is a publicly traded company, then for that reason the auditing standards that are followed are those of the Public Company Accounting Oversight Board, PCAOB. For a non-public company, a private company, we would follow standards that are promulgated by the Auditing Standards Board, which is part of the American Institute of Certified Public Accountants. So you have slightly different auditing standards depending on whether you're auditing a private company or a publicly traded company. The standards are very similar, and I'll point out instances as we go through the various topics where things are a little different. Sometimes things are a lot different, in particular in that for public companies you have to provide an opinion on the system of internal control or financial reporting. For a public company, you don't have to do that for a non-public company as an auditor. So public companies, not only do the auditors give the opinion on the financial statements, which you can see here, but they go further, and then they also give an opinion on the internal control. Okay, again, we will talk about the opinion on the internal control in chapter 7 towards the end of the class, because I wanted to go through what we actually do to support this report first, then really study the reports, and we're going to take all the reports and study them together. The report, when I say all the reports, chapter 7, the report on internal control, chapter 18, this report on the financial statements. Now, we give that opinion, and then we say, well, here's the basis for our opinion. We followed the standards, and based on these standards, we got the information that we needed to render our opinion. Okay, now you take a look, and they tell us that we have this critical matter, basically something beyond the financial statements that the auditor determined was important enough to put into the report. You don't always have to have this critical matter. Apparently Apple had something about their tax positions that they wanted to, that the auditors felt needed to be included here. Okay, and then we go ahead and we sign off on that report. Okay, now again, management is the one that is responsible for preparing the financial statements. The auditor is responsible for rendering the opinion on the financial statements, and that's what we're seeing right here. Okay, all right, good. So that just gives you sort of an idea of the report and the idea of how that report would then be used to give assurance on the financial statements, but also for a public company, giving assurance on the internal control. And we'll talk about that in Chapter 7. We'll talk about the opinion on financial statements, Chapter 18, towards the end of the class. Okay? All right, just want to give you a sense of where we're going with this. So let me see if I can put my computer back in tablet mode without having all my wires catch all over themselves here. Okay, looks like I was successful in doing that. And I want to put myself back in slideshow mode. Okay, and let's go ahead and let's take a look at the next slide. Okay, all right, now what happens? An audit is considered an attestation engagement. In an attestation engagement, the auditor attests, the auditor testifies that some information can be relied upon, and they give an opinion on that information. So the auditor is testifying. Okay, now back in the olden days, before people could read and stuff, the auditing profession been around since the 1800s. I mean, if you ever watch A Christmas Carol, Scrooge, right? During the holiday season, you sit there and you say, oh, wow, geez, that guy's working hard for Scrooge, poor guy. Well, that guy was an accountant, okay, working for basically Scrooge's counting house is what they call it if you ever actually read the book. So, A Christmas Carol rather than, I like the cartoon too, okay, but the book is pretty interesting to read sometimes too, because you get a sense of some things that aren't really communicated through cartoon, right? Okay, so what happens? That accounting, auditing profession has been around for a long time. And in that day, many people could not read. And so what auditors would do is go out and testify in the public square as to what their findings were, and they would read them out loud. So auditors audibly are to be heard. Auditors are to be heard. And you saw the written testimony, the opinion on the financial statements, but this idea of testifying and auditing and being heard has been around for a long time. So an audit is an attest engagement. Now over the years, you can see some other financial attest engagements. Okay, as the years have gone by, folks have said, well, if an auditor can testify, attest, give an opinion, right, audit historical data, why can't they give an attestation about forward-looking data and that some of the assumptions are supported and whatnot? So attest expands beyond just the historical balance sheet income statement stuff that we were talking about before. It can be looking at futuristic, prospective financial statements, which are categorized into two categories, forecast and projections. I didn't look at it, but as part of the SEC's filings, companies are required to provide a management discussion and analysis, and in some cases, not always, an entity may ask the auditor to actually give an opinion on the MD&A. Well, you're still attesting. It's not an audit because we save the term audit for financial statements, but it is still an attest engagement for these other things. You can even attest as to non-financial information, for example, the internal control. Okay, so you have audits, but audits fit under the umbrella of attest because audits, we save that term for audit of historical financial statements. If we start giving attestations, we start testifying to things other than the historical financial statements, those fall under the bigger umbrella of attest. And then There are things that you can get into that are beyond an attest. They are assurance engagements that can go and give different types of services to the CPA firms will give to various clients. Those all fall under the area of assurance. So assurance is the big bubble. Okay, just let me go ahead and go to that graphic. Assurance is the big bubble, okay, in which you are giving some sort of assurance, whether it be an opinion on the financial statements, which is an audit engagement, or some sort of attestation on something other than the financial statements, the forward-looking statements, the MD&A, or services that go beyond just giving some sort of attest, for example, internal control outsourcing. Okay, where we're going to spend our time is right here. Okay, so all audits are attest engagements. All audits are considered assurance engagements, and then we have other types of engagements that could be attest and could be considered assurance. Okay, all right, good. Now, some terms that we're going to be talking about quite a bit in some future chapters: audit risk, materiality, evidence. Okay, let's go ahead and talk about these. Materiality is a dollar amount threshold that we will be setting, and we will be talking about how to establish the materiality. And materiality is looking at the idea that some facts are more important for the decisions of investment and creditors than others. So we consider something that has a low dollar threshold, okay, to not be as material as something that has a higher dollar, I shouldn't say threshold, but higher dollar amount. So often, the bigger the dollars, the more material the fact. But there are qualitative aspects to materiality too. So let's just use an example. Let's say I tell you the financial statements are misstated by $25 million. Okay, well, that's material because that's a pretty big number, right? But let's say I told you, well, the financial statements are misstated by $25,000. You might say, well, John, big company, billion-dollar company, $25,000 is not material from a dollar amount. But if I tell you, well, yeah, but the misstatement occurred because management engaged in fraud, now that becomes what? Material from a qualitative standpoint. So you have quantitative and qualitative considerations of materiality. But the big picture is what? If it could change the decision of an investor or creditor, it is material, okay? And we'll set our materiality thresholds, and we'll look at that from a dollar standpoint, but you always have to keep in your mind, and I think that's like chapter 3, but you always have to keep in mind that, hey, there is this qualitative aspect to materiality as well, okay? Audit risk is the risk that opinion that I showed you a minute ago. In our opinion, the financial statements are fairly stated. We say that. We say that in our opinion, they are free of material misstatement, when in fact, they are not free of material misstatement. There is a material misstatement in the financial statements that we as auditors missed. That's our audit risk, okay? We're going to talk quite a bit about audit risk, but you can never get audit risk down to zero. You will never get it down to zero. There's always some risk, unfortunately, as CPAs that we have to face, that we will give the wrong opinion. We will say that the financial statements are not materially misstated when in fact they are. That's audit failure. We want to avoid that. We take many, many steps to avoid that, but there's always a risk. A small risk, we try to keep it small, maybe, 5%, 1% risk that'll happen, but it can happen, okay? And we'll talk more about that later. So for that reason, we are only able to give reasonable assurance, not absolute assurance. Reasonable assurance that the financial statements are fairly stated. There is no such thing as absolute assurance in anything, really. I mean, when you become an auditor, if your mother tells you she loves you, ask for documentation, okay? She could probably just show you your birth certificate, okay? But still, ask for documentation when she tells you she loves you. So as auditors, we, rarely we don't expect absolute assurance, and we don't expect even reasonable assurance without some evidence to support that. And we'll talk about the types of evidence that will support that as we go along, because I don't think I have a separate slide here for evidence, okay? But we'll talk about the nature of evidence that will support and give reasonable assurance, okay? No such thing as absolute assurance. Okay, all right, good. Now we're going to look at the various chapters here. Client acceptance, preliminary engagement activities, including our determination of materiality. Then we'll start getting into our evidence, our internal control, and then when we get to chapter 6, we'll start talking about internal control. Chapter 7 is the reporting on internal control, which is required for public companies under Public Company Accounting Oversight Board rules. We'll get to that towards the end of the course here when we start to move to our reports, which you can see we talked a little bit about them here, and we will really get into them in chapter 18. Okay, good. So again, to audit a public company, we have to be registered, and we are registered, and it depends on the state. But in the state of California, they say, hey, you have to be registered with the AICPA's peer review program to be qualified to audit a public company in the state of California. Okay, when we write our reports, okay, we will call out in the title that we are independent, okay, and we are registered, okay, and then we will address the report to the stockholders. I'm not going to go back to the report. I don't think I showed you that it was addressed to the stockholders. We did see the opinion. We saw the basis for the opinion. And again, it doesn't have to be, but often companies have some matters that the auditors feel are important for the user of the financial statements to know. It's not a criticism. It's not saying the financial statements are not fairly stated. We saw in that opinion they were saying they are, but there are times like that uncertain tax position that we saw when we looked a minute ago are the kinds of things that you would put in that critical matters discussion. Okay, and then we saw the signature, and we saw, I don't know if I showed you the date of the report, but we saw the signature. In that case, it was EY. Okay, now the types of opinions: unqualified, qualified, adverse, or disclaimer. These are the categories that are used for public companies. When we get more into chapter 18, we will see that for non-public companies, they have changed the title of unqualified to unmodified. Okay, and then when you start getting into the area of adverse and qualified, they still call them out as adverse and qualified, but they also have a broader title for these as modified. Okay, so you have unmodified if you're a non-public company. Sorry guys, I had a little trouble writing here. Okay, for non-public it's unmodified. If you start to move into qualified and adverse, which they do use those same terms for non-public companies, you have two categories: qualified, adverse. Public companies don't use this unmodified, modified nomenclature, and then there's disclaimer. Now, it turns out that unqualified is the best. Okay, I know when you're looking for a job, they say you're unqualified. No, I'm unqualified. You're sad, right? Unqualified here says I'm not calling out any reason why I think the financial statements are not fairly stated. Okay, that's what unqualified means. If I sit here and I say to you, wow, this is the best clicker I've ever had, and that's my unqualified opinion, means I don't say to you, well, I like the clicker, but I wish it had a little button over here. Okay, if I qualify my opinion about this clicker, I say, well, it's a good clicker, but they should have put another button over here that brings me soda or something, whatever. Okay, and so that opinion that we looked at was unqualified. That means that the auditor thinks the financial statements are fairly stated. That critical matter stuff down there does not qualify the opinion. Okay, it's just additional information. Okay, now if the auditor finds something that they think is a material problem with the financial statements, they will call that out, and they'll say, well, the financial statements are fairly stated, but there's some issue. Okay, and then if the financial statements have so many problems that the auditor determines they cannot be relied upon, the auditor gives an adverse opinion. Adverse opinion saying these financial statements cannot be relied upon because there's just too many material problems. So notice that qualified is also material, but what happens if the pervasiveness of the problem gets extreme, then the auditor will move all the way to an adverse opinion. Now, in some cases, because the auditor is not able to apply all the procedures that the auditor would like to, the auditor is required to disclaim an opinion. Disclaim an opinion means that I give up. I have no opinion on these financial statements because they have such a poor accounting system. I can't get the data, the evidence that I need to give you any kind of opinion. And the auditor is basically saying, hey, I don't know. Disclaim an opinion. Okay, we're going to get into all of this in detail in chapter 18. This is just giving you a little taste of some of the areas that we're going to. Okay, now you can see here that this is the non-public company example of the audit report. How do I know it's non-public? Well, number one, I don't start with the opinion. The public company report is the one that starts with the opinion. Okay, notice for the non-public company report, the opinion's down here, and the other quick telltale is they're saying that they use standards generally accepted in the United States of America. That means they're talking about the Auditing Standards Board, which is part of the American Institute of Certified Public Accountants. They're talking about their standards. So the structure of the report is different. Some of the key words are different here so that you know that this is for the non-public company. Okay, if it's a public company, which is what you see here, notice we have what? We have the opinion first, and we start calling them out as registered public accounting firm, like we saw on some of those earlier slides that were, as I mentioned, talking about the public company report. And we follow the PCAOB requirements there. We're going to get more into standards that are used in Chapter 2, and you'll be able to get a better sense as to how these two sets of standards for public and non-public companies actually have more overlap than they do digression. Okay, good. So that gives us a sense of the reports. Okay, all right, good. High-level stuff here, guys. CPA exam, I'm going to talk state of California requirements to you. In order to sit for the CPA exam in the state of California, you have to have completed your bachelor's degree. The bachelor's degree must contain 120 semester units of education, of which 24 have to be accounting, 24 have to be business related. Accounting, this class counts because it's an accounting class, an introductory accounting class, accounting 1A, 1B, intermediate. Okay, you don't have to have so much of tax, none of that. Any class that has accounting or tax in the title or is just called out as an accounting class from the accounting department, from the tax department at the university is going to be considered accounting for the purposes of the 24 accounting. Business, very broad. Economics, any class with the word business in it. Mathematics classes, all of these count as business. So once you complete your bachelor's with 120 semester units of accounting and 24 semester units of business, you are good to sit for the CPA exam. Now, I mentioned earlier in the introductory that we have a program at Golden Gate, our applied CPA program, and what's nice about that is we give you 12 units of education that you can use to apply to the requirements for your license. So you have to have the 120 semester units, 24 accounting, 24 business with your bachelor's to sit for the exam. But to get to your license, the standards require that you have actually 6 more accounting, 14 more business, and then 10 units of ethics. Now, when you talk about the 6 units additional of accounting, let's say you were short the units you needed to get your license, you could, with Golden Gate, prepare for the CPA exam by taking classes that we have that are aligned with the parts of the CPA exam. You earn additional accounting units for licensure if you needed them to sit for the exam. Those 12 units can be used to complete your bachelor's. Those 12 units can be used to start your master's here at Golden Gate. And then the 10 ethics units that you need, we probably have from having taken various classes like management, organizational behavior, some of those classes. And by taking accounting 302, the ethics class, you would meet the specific ethics class requirement. Okay. Once you meet all of those education requirements, you of course pass the exam. then you will need 1 year of experience working under the supervision of a CPA, and that's how you will get your state state certificate. It's a license, okay? It's a license to practice accounting. And again, I'm going through the state of California requirements. Most of the states are very similar or some variation of what I talked about. Okay. Okay, 4 parts of the exam. I talked about that in the introductory. Okay. And you can see the various weights and areas on the CPA exam. Okay. The different structures for the exam. Okay. The weights, the way the exam is structured, all of this stuff we cover in our CPA applied classes. I'm just making you aware, and you can look at this on your own. If you have questions, reach out to me about the way the exams are structured and whatnot, and I can help you with that. I can help you to evaluate your transcripts to see if you're eligible to sit for the exam, if you have everything you need for your licensure. Okay, so if you have questions on that, reach out to me. I'm just kind of showing you that there are these slides here that walk you through those processes and talk about how to set up your study schedule, and then there are certifications other than the CPA. I'm a little bit CPA centric. Okay, I am a CPA. I've seen it benefit a lot of students, but there are other types of certifications that you can get. Only the CPA is a license from the state to provide that audit assurance on the financial statements that I saw, that we were looking at, like with Apple and stuff. But there are other certifications that could be valuable to you as well. Okay. Okay. Good. That is the main stuff I wanted to cover for chapter 1 here. So I appreciate your patience in me getting this available to you. I had this from last year, but apparently if you don't save these in Zoom, they go away. Okay, but you'll see that there's chapter 2 recordings and for all the different chapters, and so you should each week look at the recording for the chapter, understand the material, understand the slides. If you want to, you can get the textbook and work those quiz and homework questions and connect that correspond to each of the chapters. Okay? All right, guys. Thanks, and I'll see you in the next recording, okay?